Hi, and welcome back to the Conscious Day Trader. Today is Monday, and today is Nyepi in Bali, which means silent day, so there won't be any live. Also, I want to have an honest conversation with you about the lives because I haven't been performing as well as I want to during the lives. So I have to be a bit selfish with myself and make the realization that yes, performing on live is a great thing and it's great for the channel because we're getting a community and building the community up. But in terms of my performance and needing to make good money each month, it is affecting it. So I have to be honest with myself. So I'm going to be stepping down from doing lives every day. I know you love them and I know a lot of people are going to be upset, but you're going to get something better in return. And that what's going to be better in return is going to go back to reviewing my profitable trades in detail every single day, giving you the videos that you've always loved for. And that's what the channel blew up because of these videos. And for the people that love the live trading aspect, I will be doing a couple of them, but it won't be as systematic as they are Monday, Tuesday, Thursday, and Friday. The realization has come, obviously we all had a difficult trade on Friday. It was NFP. I'm still trying to manage that trade. I don't want to put that pressure on me being live and people trying to comment and, I wouldn't do it that way. I would do it that way. I don't want to have that in my life. And especially, I realize that, especially when I have difficult trades. The other thing I've noticed, I went back and looked at my history and I've seen that I still trade similarly when I'm not live, but at the same time, I believe that my entries are different. Just because I'm being more cautious, because I'm online, I'm probably not taking the normal trades that I would be taking if I wasn't online, and I'm double checking things, so I'm losing time. Then I lose my repositions like it happened last Thursday. So I don't want to be at a position where I'm putting more pressure on my performance. So the trading is already hard. We don't want to put more pressure on that. Obviously, I'll be doing the Zoom calls normally every Wednesday for the Vanguards, and I'll be doing videos like this every day for you to review my trades and also to help you on your journey to become profitable. It's not random how we managed to get 30,000 out of payouts in prop firms, and if you double that and triple that in my own accounts, we're talking about 6 figures there. So nothing's random, but I have noticed that something has changed since I've gone live, and obviously the 22k loss and not getting back to those 500 days and all green days for 6 months. That's where I want to be. So I was not doing live trading when that was happening, so I need to go back to that. Okay, so that being said, today we're going to break down a little bit of what happened with NFB, where the price is now, and what I think is going to happen in the next week, because we're starting on Monday. Everyone is waiting to see, is there going to be a reaction from that bullishness on the pound dollar, which there was a huge sell-off on the dollar index, and where was it going and where is it going? Is it going to settle there? Are we going lower? All these questions we're going to answer just now. So let's go straight to it. Okay, guys, so here we are. We're on TradingView, and we've got our second favorite asset, which is the dollar index. Why is my second favorite asset? Is because I look at these at the same time. Anytime I'm trading the pound dollar or any sort of USD pair, because the dollar represents the US economy. Now, something that I'm going to be starting to analyze as well as the FTSE, just because I want to have all the information around the pound dollar that can affect the pair, and FTSE is pretty much the stock market or the stocks that are being sold in the UK, so that has an impact on the pound dollar as well. Normally it does the opposite thing with the pound dollar. If the FTSE goes up, the pound dollar has been selling off. So what we're going to see, you can see I've got my scruffy levels in there. I've got the gap, the blue gap that it took about 2 months to fill, which is crazy, but we are here now. We've been talking about this for a long time, and now we filled the gap, and we're waiting to see how London Open is going to be opening in the UK. When you're seeing this video, you'll have that information, but now we're in Asia morning, and we're still waiting for that. So we're doing some pre-market analysis. What else I've been adding there? The Fibonacci retracement of the 60 and 50%, which we're going to have a look now, and a fair value gap that sits exactly where that Fibonacci is. And these are concepts between the rough guide, for instance, who would be talking about the 23 retracement all the way to the 61. That is one concept that you can go and look up. The other concept obviously is the ICT 2022 with the fair value gaps and the retracements that they want to fill imbalances. Now, when you're trying to get a clear picture of what's happening, I would always go higher time frame. You can go to the monthlies, you can go to the weeklies, and you can go to the dailies. I wouldn't stick around the 15s, the hours. Just try and understand what the price and what the next target will be in terms of liquidity. Now, guys, when we look at this, I look at this and see a big retracement from the weekly level all the way down to what? Like the rough guide suggests, that if we break the 23 convincingly, we're going to retrace back to the 50s and the 61A. Now, I can see this push continuing into my monthly level down here. Why? Because we can retrace, the Fibonacci normally retraces to the 50% and can have a reaction. And you can argue that this candle here has pretty much filled that role to the 61A. We haven't tapped into the 102. And that is a key number, because if you look at the 102 and you look on the left side here, it's been impacted once, twice, here 3 times, 4 times. It is a level where the price wants to go and retest and get a better price before it starts moving in the other direction. But we have had a substantial move to the downside, which means we can potentially be looking for a bullishness in the dollar index coming very, very soon. Last time this happened, we look at this price action here, we came all the way down and then it filled exactly this fair value gap here, all the way to the pip. So we are anticipating this. If we look at the reaction though, we are anticipating the move to go a little bit lower. So it might be a little bit of a bullish open before we start going down. If we look at that for comparison, into the 61.8, a little bit higher than the 61.8, and then it reacted down. This is the reverse. It's just below the 61.8, above it, and we're still seeing if that's going to come and retest this level. So if you are short in this position, I would be looking to be able to decrease a little bit of risk so I can push that price a little bit higher before we start coming lower. But we're going to look at that when we analyze the pound dollar. Okay, so there we go. That's the overlook on the week. Now what I'm going to do, if we drop this on a daily, we can talk about that gap that got filled. The most it's never been filled on the pound dollar dollar index was 80 days. That's a long time to wait. But we can see that we filled it and we're now continuing to push a little bit down. We had that reaction up, but we're still continuously pushed down. Where can be the next push? It will be at the 102s. That is, if we're going lower, that's where we're going. Now, if the price starts pushing up, which is possible, it's highly likely because we've had a big drop, where will it be going and where will it be stopping? I believe that we're going to be going back to retest this fair value gap here before we go and retest the 102s. We need to have a pullback. There's going to be a pullback at some point. So where is that pullback going to be? It's going to be at the 50% of this move. If you throw a Fibonacci on that, you will see that the Fibonacci retracement is exactly at the middle of the golden zone. So that 50% of that fair value gap meets two things. It meets the Fibonacci retracement to the 50 and 61.8, but also the bottom side of this order block here, which is the order block of this bearish move here. If you know ICT, you know what an order block is. It's basically saying that when the price will change and create a bullish side on a bearish move and a bearish move on a bullish move. It's pretty simple. It's the last candle from the last green or red candle, depending on the move that you're looking. If you're bearish, you'll be looking for a green candle. The last green candle that the price reacted normally becomes then resistance. So we might see that play out. We might see a push up and then delivery down. If that comes up, it's good news for the pound dollar. It's good news for the people that are stuck currently in the pound dollar. If you're looking for price to be bullish on the pound dollar, I have still an analysis that can support that idea, because we'll be hunting this 61.8 and potentially the 102. And if you're thinking that this can be really bearish, we're looking then at 105, 101.5. If I move the chart a little bit, you can see the 101.5 actually comes into this fair value gap here. And I bet you if we put a fair value gap on this, pretty much close to the 50% is going to be that 76.4. So we do have opportunities for both ideas, which is great. That's where you want to be. You want to be having options, because if you start seeing something playing out, you know where it's going. If we start seeing a breakup to the upside, we know Yes, it needs to break this level here, this weekly level, which has been an order block here. It does need to break that in order to go to the 50%. So the first play we're looking at is it going to come here and then start selling off again? The second play is if it breaks the level and strongly convinces breaking above the weekly, which is what? Is breaking above the 23.6, highly likely that we're going to be going to the 50%. If we see that action, then we know that we need to be selling the pound dollar. If that action is not there, then we're looking for the sell-off of the dollar index, which will be going where? To 102. If it breaks this strong level of the 102s, because we haven't been there since 15th of January, then we're looking for the 101.5s and especially the 76.4 of that Fibonacci retracement, because it fits that fair value gap that we've been talking about. So there we go. That's the analysis of the dollar index. Now we have the two, we analyzed it really well. We know where we're going. We know what we need. If we see price going to the upside, we need to be looking for positioning ourselves for our shorts. If we're going down, we need to be managing our shorts if we're in a short trade like me. If not, you'll be looking for opportunities for the long side. There we go. Two options there. Next one. If we throw this on the daily on the pound dollar is my favorite asset. You know that. I trade it every day. It's the one that made me 30K in payouts. So I can't go away from the pound dollar. I just love it too much. What do we see? This is where Scruffy has great levels. And Scruffy takes levels on the close. Other people take it on the open. I like the close. And I was watching one of the interviews on the Fivers where he had the institutional traders. He doesn't use the price action like Scruffy does, the lines, but he uses the this price action. It makes it really simple. But if you look at the levels in terms of the Scruffy levels and the institutional traders levels, they're all doing the same thing. So as long as you're trying to find price where it's reacting, for instance, we can see here that this line here has so many wicks touching it. That is pretty much resistance on the price. That is a good level. And you can see it's reacting all the way back to August, and you can go back in history and you will see it reacting. So Scruffy does the lines because it creates quite an easy way to put the lines in. I can't remember the name. Paul, I think. Paul does a bit more subjective where he decides where those lines are. I like the Scruffy way, so I use the Scruffy way for the levels. Shout out to the Scruffy. If you don't know him, go and watch him. He's an amazing trader. The biggest question here is, are we going to the 129, or was this enough to start selling off the pound dollar? That's the biggest question. A lot of people are currently stuck, including myself, in this trade short. So what do we need to start analyzing? We need to start analyzing the worst case scenario. Worst case scenario is that we're going to take liquidity above this level on the top here, which I hope it doesn't, because that is far off. We're looking about 1.13s there. If that happens, then we're in big serious trouble for the shorts. But if you're like me, I think we've had a retest of the 128. I thought we're going to be going to the 129. It got very, very close. If we look at the top of this candle, and you can see it on the top side there, we're looking at 128.938. So we were extremely close to taking the 129. We didn't get it though, but we are getting closer and closer. But as you can see, this candle here reaction, if you look on the left side, we've had this twice being touched here by the wicks. So it is a good level. So I have an argument. I have the argument for the shorts that we will be retracing this price if we break below the 23, which means we have to get back down into this level here, all the way to the 50%. Look at where the 50% is exactly on a monthly level, and it's all on golden zone. And something else that's really interesting on the pound dollar, we've had 1, 2, 3, 4, 5, 6. This is 7 days, a whole week of green candles. That hasn't happened in a very long time, right? Very long time. Maybe here, 1, 2, 3, 4, 5, 6. This is 6 candles. The 7th candle was red. So it's a lot of time. It's very rare that we're getting this all the time bullishness on the pound dollar. And that's why I got caught, because I looked at my data. Yes, my data was saying something that I should be looking more carefully about last year. Last year, if we look at the data, we were looking at a monthly retracement, a monthly push of 2.6, I believe, 2.3, something like that, % on the close of the month. on last year's March. We're now at 186, and it went all the way close to 2%. The average, though, in the last 40 or 70 years or whatever you put in there, even if you put 10, the average is very close to zero. So I am anticipating price to come back down unless we start a new trend like last year, hitting those bullish candles on the closes of March. So that will be interesting to see what happens there. I am anticipating, though, a push down at some point. Okay, so if we go back and do the same on the weekly, we can see that this weekly candle is a big candle. Last time we had this. Now, look at historical data. When we've had big candles like this, two things can happen. You have a big reaction candle here, and then you had another engulfing candle of this, and then it starts pushing up. When you have these huge candles, you do see the reaction. This reaction was nearly to the whole move as well. This huge candle now in reaction. But you have had candles like this where they haven't retraced, where it was actually the start of the move, like this one. Big bearish movement, big bearish movement. We had 3 big bearish movements. So this can very easily blow out accounts. This move is going to blow up a lot of accounts. Just because if this is another bullish green candle like this with no retracement, if you haven't risk managed that position, it's going to be blown 100%. Because we've looked at this size, we've done 240 pips on that week in one candle. So quite a bit out of what we've been doing in the last month on the pound dollar. We're consolidating with these small candles. So be careful on that. So let's go back and analyze what our plan is and what we're looking for in terms of the pound dollar when it comes to looking for, if it comes down, where are we looking? So if it comes down, we put that Fibonacci on there. We're looking for it to retrace all the way down to this fair value gap here, and I am going to put it in. So we have that nice Fibonacci retracement there that it can come and retest. Let's have a look on what that means in terms of the fib move. The fib move, we're looking for that retracement there is exactly on the 50%, and the Fibonacci is at the 38. So if we break below the 23.6, it's highly likely that we're going to the 38 on 127.8. So that is what we're looking for. Hopefully that happens. Now, if that doesn't happen, what can happen? We can have a small push down to the 23.6, find this level here, and then start being another bullish start to the week. It is possible, guys, that we see something like that to take the highs, to go to the 129. And if we're talking about big move to the upside, then we're looking at that 1.13. 1.3, why? Because we'll be getting into this fair value gap and this high swing high here. That will be the 1.3. Now, do I think that's going to happen? I'm more swayed that we're going to be looking for a bearish move on the pound dollar in the coming week. But manipulation happens. Everyone starts thinking, okay, I did mention that we're going to the 129, and it did happen. Okay, we didn't hit it, but we got close to it. Manipulation happens. A lot of people are stuck short run it currently, so it can easily go and take that liquidity and take all our orders out and then start selling off. When you have big money, institutional money trying to do that, there's nothing that can get in the way. Now, I strongly believe that this is going to find this 23 bottom side here. If it doesn't, then I'm looking for the first liquidity draw to be above this level, which will be retesting the 129. So we're going to put our buy side liquidity there. I can see that happening. And that's the pound dollar. It's pretty simple. If you're bullish on this, I would wait for a push down to the 23.6 so you can get a more convincing. See a fail and then start pushing it to the 129. If you're bearish on this, if you're not in the position yet, I would wait for the liquidity draw to 129 or a convincing break below the 23.6 and start pushing it down to the 38. You still got enough room to make some good profit from the 23.6 down to the 38.2. You're talking about 40 pips. That's nice. And it's a really, really nice, simple trade, and it's quite a high profitable probability trade. But like always, guys, this is for education. It's not financial advice. So don't take any trades because of what I'm saying. Do your own analysis and push your own buttons when it comes to trading. And finally, guys, what we're going to do is going to go on Let's look at Bitcoin for a second. What has Bitcoin done? Look at that. It came down. Levels just works everywhere, guys. And we can see that here. Now it's found that level there on the 67,000. And now it's starting to push up. Are we going to break the 70,000? That's the big thing on Bitcoin. Quickly on the gold is actually on a screamer as well. A lot of people are caught short here. It's at all-time highs. What is happening with gold? How do you trade gold? I would not touch that thing. It's scary as hell. Last one, which we're going to do, we're going to find FTSE. I don't have it in here because I don't trade it, but we're going to go on indices. We're going to look at FTSE and we're going to look at, there we go. We found the index. We're going to find the FTSE and we're going to see what's happening here. I haven't looked at this for a very, very long time. I'm not going to put any levels on this. I just want to look at what has been happening. And it's so obvious here, right? So we've had a huge push to the upside, and this is on the daily. This is the low, this is the high, and the price has been trading below that. Look how nicely it's been trading within these levels of the Fibonacci retracement on a daily. Found the 61, came back up, traded above the 23, failed to take the high. So what did it do? Broke down below the 23, came and found the 61 two more times. And then it consolidated between the 23 and the 61. So now if that is going to react again like it did on the 23, potentially we can go back and retest the 61. However, if this was the last reaction and hopefully we're starting to break up higher and find the highs to the 8,000s, that would mean that we're going to be a sell-off on the pound dollar. But we're going to see. We need to see that reaction. So I'm going to mark this up, and the next video you're going to have it marked and you're going to see it. Get used to the FTSE because we're going to be talking about it in terms of the impact it has on the pound dollar. Okay, so I know that a lot of people are going to be quite disappointed that there's not going to be a live today, but guys, I have to think of myself first. I love the community. I love all the people in there. I honestly thank you so much for all the support, the likes, the subscription. Talking of which, make sure you subscribe and like to the channel. I can definitely feel all the love from you, and I do want to provide good quality content to you. I can only do that if I'm profitable. You don't want to look at someone who's not profitable. You want to look at someone who's doing well. So I have to focus on getting back to $500 days and the profitability that I had last year. And I think I need to go back to doing less live content and starting doing more analysis and focusing on good quality trades, which I normally take in the Asian market sometimes because I can see some good opportunities and not wait just for the London Open. So I'm going to go back to do what I used to do, and hopefully we'll be on more interviews with massive profits. Appreciate all the support. Look out for the video tomorrow. I'm going to do a video every day breaking down my trades and seeing how we're doing. And until next time, have a good one.